Hello there everyone, I hope you're all well and welcome back to another video on the YouTube channel. So I'm making a return with the educational content, so I'm going to start breaking down many confluences that you can use within the market weekly in the hopes that you guys can obviously learn how to trade without needing to pay for any material and that side of things. So in this video here we are going to break down the third touch of a trend line. Now, if you are not familiar with this, by the end of this video, you are going to fully understand how to trade the third touch of a trend line like outlined on the screen. I'm going to show you how to potentially find some opportunities within the market. We're going to go over what is it, why do we use it, how do we use it, and then also some examples. So I will make it as quick as possible for you because it's not a super hard concept to grasp. So if you just bear with me and we will make our way through it. So overall, trend lines, what we're going to go over is very easy, but it is also very profitable. So with trading, simple is always better. Don't overcomplicate it. The easier it is, obviously, the more you are going to learn. So what is it? So in simple terms, the third touch of a trend line refers to the idea that after drawing a line connecting two or more significant price points, or lows, highs within the market, the third time that price touches that line, it can often lead to a nice reaction from price. So basically, if you've got two highs or lows within the market, if you connect them with a line, the potential third time this hits is obviously potentially when we're going to see a reaction. So traders watch for the third touch. This is because it might indicate a continuation of a trend. However, it's always important to remember that although this can be helpful, it's not a guaranteed rule. You can't just draw a third touch of a trend line and hope price reacts. You need to obviously have other confluences, which hopefully you should understand. And if not, we will go over some by the end of this. So it's a confluence. Now, a confluence, if you don't know, it is a reason to enter a trade. Okay? The more confluences or the more reasons you have to enter a trade within the market, the chances are there is more probability that that trade is going to win. So basically, when we're looking for the third touch, it is just an extra reason to enter the market in an area of interest, okay? So why do we use it? This is 3 points on why we may potentially use it, and obviously the reasons why other traders may do as well. So the first and second touches of a trend line can be seen as a test of a trend strength. So when you're looking at the first and second touch of a trend line, that's kind of the beginning. Because at the end of the day, if you just have one high or low within the market, you can't predict anything based off that unless price was to come back up to the high. So you need to obviously get that second high as confirmation that the market is either heading up or down. So by the time that third touch would occur, as traders, because we've seen points 1 and 2, we're going to feel more confident that this trend line will accurately represent the trend movement within price. Okay? So that's pretty much it in basic terms. It is like a trend continuation thing, or confluence. Market psychology. So the market moves by actions of everyone who participates in it. Obviously, I know people, the big players move the market and that side of it, but within that, obviously retail traders as a whole, if there are entry areas that a lot of people are looking at, the market may move. So if there's a level that a lot of people are watching, and it could be due to many other confluences, but one of them may include the third touch of a trend line, if people are looking at that level, we may see a reaction there. So as all the other confluences we use, it's just another potential reason. Might be key level, might be fib, might be an EMA, you might have an order block, whatever it may be, if there's a third touch there as well, there's a good chance that this is going to work. And then just finally, pattern recognition. So many traders use patterns to identify opportunities. It could be, flags, wedges, whatever it may be. A lot of traders will use patterns within their trading to obviously find opportunities, and this is just another type of pattern that we may potentially be able to use. So how do we draw them? So if you look at these examples on the screen, We are basically identifying the significant highs and lows within the market, because this is going to allow us to find the strongest trend line and the most obvious ones within the market. So I've put a little note here saying we will always use the wicks so that it's more accurate analysis. So what will happen is that, let's say we've got price here moving upwards as of right now. We've got a clear low within the market where I've outlined number 1. We've got a clear low outline in number 2. So what could we potentially do is look and try find where number 3 may be. We're going to go into some entry requirements after this slide here. So this slide here is just to show you how to actually draw them. So what we're looking at is the first and second touch of a trend line on the wick. Why use the wick? Because it's more accurate. If you start cutting through price, it becomes subjective, because you might have drawn it one way, another trader might have drawn it another, so it's not as accurate. If you use the wicks, any trader who's also using wicks is going to have the exact same trend line as you. It's not going to be subjective at all. Okay, so that's a bullish example or a buy example. If we look for a bearish or a sell example, same again, we are simply just looking where the market is now. It's down here. We've got a high here, a high here. So that's touch 1, touch 2. There's a high chance when touch 3 happens that we may see a reaction. Okay, so it's as simple as that. You're looking for the most obvious highs and lows within the market. You are drawing a trend line from the top or the bottom of the wicks. And then following that, you are going to anticipate the third touch. And then a final example here, just to show you it doesn't have to be always this steep. You've got 1, 2, anticipating the third. Obviously, the steeper the trend line is going to be, I would say it's going to be slightly more higher risk. And by steeper, I don't mean something like this. I mean one of them trend lines, which is basically just going up in a straight line. Be mindful of them. You want to obviously see the touches quite nicely spread apart, because that way then obviously it's just a bit more obvious and a bit more simple. Okay, so stick to the highs and lows of the wicks, draw that and anticipate the third. So now let's go over some previous examples on the charts, and then by the end of this, hopefully you're in a position to start going and analysing the markets yourself. So on the screen now we have Euro New Zealand dollar, quite a volatile pair. So if we are looking at this chart right here, I'm going to basically show you a bearish example or a sell example. So if we are looking at this chart here, what I can basically identify is that we've got a high up here, and the next significant high is this one here. So what we would do is draw our trend line. Now, what you can originally do if you'd like is pre-plan where it could happen. So if I'm looking at this kind of structure in and around here and where price is at, I could probably say that price was going to maybe come up here, because look, you can see you've got a touch here, touch there. So this here is a nice key level within the market. So you could basically say, if price comes up here, then I'm going to take the trade. Alternatively, if you don't want to do this just yet, what you could do is get rid of the analysis and just wait till price comes close. So what you could do when you see price coming close, so like something like this, you now know that price is going to hit in and around this area. Now let's try find the confluences. So same again, literally just going off what we just did then, you can see here, this is actually going to line up nicely. Let's also just draw a Fibonacci. And as you can see, if we go to here, we've got the perfect alignment for the third touch of this trend line. So rather than just trading the third touch of a trend line, we've also got a nice key level with multiple touches. We've got the round number, and obviously we've all, or not the round number, sorry, we've got the key level, the third touch, and also a 61 Fibonacci. Okay? And that is basically all you would need. So what you could potentially do, set your position just below, like so. Stop loss, completely up to you, whatever your stop loss strategy is. The zone size here is about 17 pips. So if you wanted to maybe do about 30 pips on the stop loss, then you could. And then in this situation now regarding TP, there is no fixed take profit strategy. So originally, if you want to go for a 1-to-1, then obviously you can, and then following that, you can continue to obviously target structure or whatever you may want to do. So it could be something like, you want to target this previous high. I don't actually know where price goes. Let's see what happens. So you tagged in, and then there you go. If you'd have even targeted that previous high, you would have got a nice 1.5 out of it. And then let's see what happens. Price went down maximum to a 3.5 to 1, and then went and took you back out. So just by looking at this example here, let's just go through it step by step one more time. We had the first and the second touch. We are anticipating the third. As we saw price come near the third, we identified that price was coming up to retest two previous highs, and we also had a 50 Fibonacci from the recent move within the market. Therefore, we had three reasons why this third touch should work, three confluences, which makes for a very strong trade, okay? So that is the first sell example. What I will do now is I will go identify a buy example, and I will show you exactly how you could also identify. So right now we are looking at USD JPY on the 4-hour time frame. We're going to go over a buy example. What we are going to just kind of go over a little bit here is that the time frame. So this is the 4-hour. If you are trading the 1 minute, the 5 minute, etc., then obviously the trend lines are not going to be as strong, and that's just common sense. The higher the time frame, the stronger the level. It's as easy as that. So in this situation here, we are basically just going from the lowest low within the market, which we've got here, to the next low. What I wanted to go over in this situation as well is that if you see that there's two wicks like so, instead of keeping it on the one wick, what you can do is actually incorporate both wicks. So you could do that. Obviously, that third wick doesn't mean a third touch, because what we are interested in is 1, 2, 3. Three visits to the trend line, okay? So just because that wick's touched it, that is not the third touch. You are waiting for three separate bounces within the market. Now, if we look here and just identify where price may potentially be going, we can see price come down. So if price was to come down on this next candle, you are looking in and around this area here, okay? What can we see going left from this area? There's a nice wick there that I would class as a nice key level. There's also some structure over here. So what you could do is originally do that. That's absolutely fine. If we look, we are pretty much near the 13950 round number. So if you wanted, you could also incorporate the round number. And let's have a look and see if there's a Fibonacci. I don't know if there is, but let's have a look. Perfect. So we've also got a 61 fib. So now we've identified where the third touch of a trend line could happen. We've got a nice key level within the market. We've also got a round number, and we've also got a 61 Fibonacci. Let's have a look and see if there's any other EMAs. No, so there's no EMAs. It's simply just a three confluence buy area. What you could potentially do is set your position, obviously, like so. Stop loss in this situation, if you wanted, could be below the low, or could be obviously below the trend line, but I'm just going to keep it below the low. And then obviously originally you're going to target a 1-to-1, and then obviously any extended target. So let's see what happens here. Price comes down into the area, and then there you go. So that would be TP1. Extended targets, I don't know what you could potentially do. Maybe this structure point there. I don't know if it reaches it like, but oh, perfect. There we go. So there you go. So that is basically it, because if you imagine this is almost like a trend continuation. So by doing this, you could even, if you wanted, say that price may reach the high. I don't know if it does in this example, in all honesty. No, see, look, so that's a fundamental. Thursday, 6 o'clock, that would be FOMC. So again, you don't want to be greedy, because like this trade here is 3.5 to 1. Yes, the market is potentially trending up in this short period here. But as you can see, if you look, price also was coming down into a down channel. So don't be greedy with your take profits. Take what you can. I always like to do a 1-to-1 because my win rate is high. And then following that, obviously, you can take further partials, etc. So that is then a bullish. So what I'm going to do, guys, I'm going to make some links in the bio. So if you want to join the free Telegram where I call out trades, you can. If you want to join the paid one, then again, if you want to, you can, completely up to you. But that is basically trend lines broken down, the third touch of them, how we can use them, and also some examples to go alongside it. So if you have actually learned something from this video, a like or a comment would be appreciated, guys. It does help. But if not, I will see you in the next video.